Hello my beloved moneymakers and welcome to a new edition of Money Flies. Today I'm gonna show you a new video with the top 10 upcoming IPOs that you should watch in 2020. So stay tuned guys. Okay guys, so probably many of you that don't have experience in the stock market are wondering what is an IPO. I'll try to briefly explain you what it is. So an IPO is an initial public offering, which refers to the process of offering shares of a private corporation to the public in a new stock issuance. So public share issuance allows a company to raise capital from public investors, such as you or me. This transition from a private to a public company can be an important time for private investors like us, because we can find something called the unicorn, guys. This can be something similar to what happened with Microsoft or with Apple or Amazon. This is a good opportunity for you guys to find the next gold mine. At number 10, we have Asana. Asana is a company that makes collaboration software for the workplace. Asana is expected to begin publicly trading via a direct listing on September 30. Its co-founder and CEO, Dustin Moskovitz, would likely have faith from Wall Street, having co-founded a little company called Facebook many years ago. Asana's potential 2020 IPO valuation is between $2.6 billion and $5.3 billion. At number 9, we have GoodRx. GoodRx is a comparison shopping tool for prescription drugs. GoodRx platform posted revenue of nearly $257 million in the first half of 2020, up by more than 48% from the same period of the year ago. Better yet, the company is consistently profitable, with earnings soaring 75% in the first half of the year to almost $55 million. The company hopes to raise up to $100 million in its debut, which fetched a valuation of $2.8 billion in 2018. GoodRx should likely fetch a valuation of $3 billion given its progress and profitability since. At number 8, we have Bumble. Bumble is an online dating app second only to Tinder in popularity. Currently, the app has as many as 100 million users. To be honest, there is still certainly room for investable diversity in this niche, as currently Match Group, the parent of Tinder, Match, Hinge, Plenty of Fish, and others, is the only game in town. Bumble might still wait until 2021 to hit the market, so it will be interesting to see how it will compare to its rival Match, since it's already reached the market capital of $28 billion. At number 7, we have Wish. Wish is an e-commerce company, and it's one of the few companies that are proving its willingness to go up against a trillion-dollar company such as Amazon. Since its debut in 2010, the company has raised its valuation to $11.2 billion. Until now, Wish has focused on the niche within e-commerce, a focus on largely unbranded and inexpensive items, but now it seeks to connect buyers directly to manufacturers, which often operate in China. Wish filed confidentiality for an IPO to finance further expansion, so expect to see its financials in short order. At number 6, we have Unity Software. Most investors probably haven't heard of Unity Software, but I am sure that many consumers have enjoyed using its products. The company estimates that more than half of the 1,000 most popular iOS games were created using its software. As the provider of tools needed to create 3D interactive content, Unity is widely used in today's digital age. Its software is heavily used by game developers, but also the likes of artists and architects. Currently, it is estimated that the potential 2020 IPO valuation of Unity can be more than $11 billion. At number 5, we have Robinhood. Robinhood is a free stock trading app, and it changed the entire industry by becoming the first widely used broker to promote zero-fee trades. Competitors such as E-Trade and Fidelity slashed the stock trading fees in 2019 to compete with Robinhood. A central force in the rise of the retail investor, Robinhood makes money by selling its order flow to market makers and high-speed trading firms. Interest earned on cash balance as well as on debit card and several other sources. Robinhood's valuation has been soaring in 2020, raising money at an $8.6 billion capitalization in July and $11.2 billion in August. At number 4 we have Palantir. Palantir is a data mining firm that recently filed for a direct listing, with the company slotted to go public on 23 of September. Although technically distinct from an IPO because only existing shares will be sold, the listing still allows investors to buy directly into the business. Recent private valuations have varied widely, ranging from roughly $8 billion to about $20 billion on the high end. Like Airbnb, Palantir has seen private valuations slashed. In 2015, it raised money at a $20.3 billion valuation. The company, which derives most of its revenue from the government, has never yet been profitable, although losses are trending downwards. At number 3 on our list we have DoorDash. DoorDash is a food delivery app. The company reported planning an IPO in the fourth quarter after filing confidentiality to go public back in February. Considering the stiff competition, the economics could prove difficult in the early goings, even amid pandemics. If a 2020 IPO comes to fruition, investors will soon see the financial health of the company for themselves. With investors such as SoftBank and Sequoia, DoorDash has raised billions in the private market. Recently, the company has been valuated to $16 billion, which is a massive jump from $13 billion from November 2019. At number 2 on this list we have Snowflake. This is the first IPO of this list that is entirely business-facing. A company that also happens to be one of the most rapidly appreciating names on this list. The cloud-based warehousing company which allows users to store, share and transfer data, seemingly between multiple major platforms like Amazon Web Services, Azure, Google Cloud, and Salesforce, was valued at about $1.5 billion in January 2019. In February 2020, it raised $479 million at a $12.4 billion valuation. The company became public on 16th of September, so you should rush if you want to have a head start. Also, the company may seek to raise money at a nearly double its February valuation, and Berkshire Hathaway will actually buy a roughly 2.5% stake at the IPO. The current valuation of the company is between $20 and $24 billion. At number 1 we have Airbnb, the short-term rental giant. After planning to file for an IPO in March, Airbnb pushed back its plans due to a new global crisis that started with the new coronavirus. The company filed for confidentiality for an IPO in August, putting it on track to go publicly by the end of the year. Despite the fact that Airbnb reported a decrease of 67% in revenue in the second quarter, with the company posting a minus $400 million loss before interest and taxes, the situation seemed to have changed. US bookings were reportedly higher in May 17th through June 3rd period compared with last year. The most recent private funding round valued Airbnb at $18 billion, almost half of its 2017 valuation of $31 billion.